The USA and China pressures Indonesia economy. Indonesia's economy doesn't operate in isolation. It's deeply tied to global economic trends and decisions made far beyond its borders. From rising interest rates in the United States to shifting trade dynamics with China, Indonesia faces external pressures that significantly impact its economic stability and growth. Let's start with interest rates. The Federal Reserve's recent decisions to hike interest rates to combat inflation in the US have had ripple effects worldwide. For Indonesia, this has made borrowing more expensive. Indonesian companies with dollar-denominated debts have struggled to manage repayments, and the government's ability to finance infrastructure projects has been strained. According to Bank Indonesia, the nation's foreign debt reached $405 billion in 2024, putting immense pressure on the economy. The rupiah has also felt the heat. As global investors seek higher returns in developed economies, capital outflows from emerging markets like Indonesia have surged. This has led to a weakening of the rupiah, which dropped to its lowest value in 5 years against the US dollar in late 2024. A weaker rupiah makes imports more expensive, driving up inflation and eroding purchasing power for ordinary Indonesians. Then there's Indonesia's trade relationship with China. As the largest trading partner, China's slowing economy has had a domino effect. With reduced demand for Indonesian coal, palm oil, and other commodities, export revenues have taken a hit. The ongoing US-China trade war has further complicated matters, as Indonesia finds itself navigating the tension between two economic superpowers. Aligning too closely with one risks alienating the other. The rise of BRICS nations, Brazil, Russia, India, China, and South Africa, and their push for a new global currency to rival the US dollar, adds another layer of complexity. While Indonesia isn't a BRICS member, the bloc's economic decisions influence global trade flows, potentially reshaping Indonesia's markets. For instance, if BRICS nations reduce their reliance on the dollar, it could destabilize global currency markets, impacting Indonesia's ability to trade effectively. Oil prices driven by OPEC's decisions also play a critical role. Indonesia, once a member of OPEC, is now a net importer of oil. Rising global oil prices have strained the national budget, as the government continues to subsidize fuel to keep prices manageable for citizens. These subsidies, while necessary for social stability, divert funds from critical areas like education, healthcare, and infrastructure. Global economic uncertainties, such as the ongoing war in Ukraine and geopolitical tensions in the South China Sea, further exacerbate Indonesia's challenges. These conflicts disrupt trade routes and increase shipping costs, which are already high for an archipelago nation dependent on imports for essential goods. Indonesia's reliance on foreign direct investment, FDI, adds another layer of vulnerability. While FDI inflows reached $30 billion in 2024, much of it is concentrated in resource extraction rather than value-added industries. This leaves Indonesia dependent on volatile commodity markets and foreign investors' confidence. To navigate these challenges, the government has tried to strengthen economic ties with both Western nations and regional partners. Initiatives like the Regional Comprehensive Economic Partnership, RCEP, aim to boost trade within Asia, while infrastructure projects like the Jakarta-Bandung high-speed rail seek to enhance connectivity and attract investment. However, these efforts are often hampered by delays, corruption, and bureaucratic inefficiencies. Indonesia stands at a crossroads. On one hand, it has incredible potential, a young and growing population, abundant natural resources, and a strategic location in the global trade network. On the other hand, these strengths are undermined by systemic issues and global uncertainties that threaten to stall progress. The question now is, can Indonesia rise above these challenges to secure a brighter future? The government's initiatives, like the downstreaming policy for raw materials, infrastructure development, and regional trade agreements, offer hope. But these efforts need to be backed by systemic reforms, transparent governance, and a renewed focus on human capital development.